Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. Now, in today's video, we're going to be looking at patterns. Now, how to spot a good trade. How to know is the stock going to go up, down, consolidate? What's the best approach? So, I hope you guys all enjoyed today's video. If you do, smash that like button and subscribe. But if you guys want to elevate your trading game, check out our school. It's fantastic. Private live streams, quizzes, lectures, a group chat. But more importantly, we actually teach you to trade. It's not a get rich quick scheme. It's not alerts or anything like that. This is honest strategies that I've learned over the past 7 years. So check it out down below. It's awesome. It's affordable for beginners. We have, two tiers, a starter tier, which is like $50, and then a pro tier, which is about 200. So check it out down below. And let's have a quick word from the sponsor of today's video, which is the broker that we're actually going to be using today. So make sure you guys check them out. I know a lot of you are just getting started with investing, and one app that I've been using is called Moomoo. It's super beginner friendly, but still gives you pro level tools like live market data, easy to read charts, and news all in one place. And the best part, new users can get up to 60 free stocks when you open up an account with qualifying deposit. And honestly, that's actually why I tried it. And I've been using it ever since. Check out the link down below if you guys are curious. So yes, the broker is Moomoo. So if you guys want to sign up, you guys can get up to 60 free stocks just by signing up and clicking that link. So honestly, if you're getting started into trading, I highly recommend it. But enough with that, let's dive into this. So when it comes with pattern recognition, you do have to have a broker that offers advanced charting. So for me, like I said, I use Moomoo. They've been really good. And honestly, I know they sponsor a lot of my videos, but why I chose to be a partner with them is because I use the product. I would never recommend something that I really don't use. So, all right, enough with that. Let's kind of talk about the trade on ticker symbol FOA. Now, everybody always asks, and they go, Carter, what's the best strategy? What's the best approach? And here's the thing. When it comes with that, it's very hard to say this is the best because, one strategy that works well for me, you may have a hard time, with that. So for me, I always think it's smart to just build a checklist and paper trade, figure out what strategy works well for you, experiment during your learning phase, and go from there, right? Keep track of your trades, all of that stuff. So this is the trade that we took on FOA. Before I ever trade a stock, I love looking at trends. And you guys can see it's gone from about $4 all the way up to 32. And that move is huge, right? That's almost 700% in value in less than a year. And then, it sold off, started to get some buying pressure and all that good stuff. So for me, you got to look at moving average lines, right? So moving average lines are these red, blue, and yellow indicators. They're trading indicators that traders, hedge funds, analysts use to get a general gauge of two things. The first one is trends. The second one is going to be support and resistance. When a stock is above it, like it is up in this range, moving average lines will act as support. So you'll see a lot more tendencies of getting buying pressure. You guys can see it hits it, right? We have a couple of good moves, hits it here, popped up. But looking at this red line, the red line is the 200-day EMA line. So it's one of the hardest supports that a stock can have. You guys can see it sold off here and hit it right once, twice, 3 times, almost 4 times. And then recently, this is why we went ahead and we looked at the stock here, is because it was approaching right that 200-day EMA line. So ideally, you would want to buy a stock that's on an upward trend that has sold off down to some sort of support line. So in this circumstance, it's that 200-day moving average line. But I also said moving average lines can act as resistance. When a stock sells off, right, and is below it, we'll see tendencies of it using it as resistance. So you guys can see it hits these points. We just have a hard time breaking above it. So in a perfect trade, you could throw an alert above a hard resistance for some sort of breakout. And you guys can see here that it would have panned off really nice with this stock. Okay, so The next thing I look at here after the, moving average lines, the trends, I'm always going to take a look at an indicator by the name of the RSI. This stands for the Relative Strength Index. At the time, it was trading for about a 30. The last time it was trading for a 30 was back in this range right here. Okay, and what happened? It was followed by great buying pressure. So ideally, you want to find a stock on an upward trend, sold off down to a support line that's undervalued on that RSI, or has seen recent tendencies of buying pressure at the current RSI, point. So after that, we're going to go ahead and we're going to move to a lower time frame. Before you ever buy a stock, it's important to look at several different time frames, because one time frame like this could be telling you to buy, another could be telling you to sell. Now, as far as pattern goes, the thing that I really look at on the daily is going to be this candle right here. Okay, this is what we call what appears to be almost a doji, which has tendencies of being a reversal candle, which is very important. You can see that same candle right in here where it had good buying pressure after. Okay, and if we went ahead and we looked for other ones, let's go ahead and see if we can find one right here, followed by some buying pressure, almost one in here, right, actually about right there. So ideally, kind of how it looks is almost like a T, okay? Because this represents buying pressure. So you want to make sure there's more buyers than sellers, if that makes sense. All right. So after that, here I wanted to bring that up because it's very important. After that, we go to that hourly time frame, and you guys can see that it was selling off and was forming just this general downward trend. So if we remove the pre-market and after hours, you guys can see just this general trend line. So what we did is we just threw an alert above this resistance points, and the stock popped up, got in near and around the 21 like 25 area. Now the thought process was very, very simple with this trade. Entering here, keeping the stop loss below 19 for a possible push up to highs gives a risk and reward of about 3.52, meaning I'm risking $1 to make about almost $4, which is really, really good to see. The stock has been performing very, very well. So now as the stock continues to go higher and higher and higher, we're just actually going to keep a stop loss. Right now, we'll go ahead and adjust it. And we'll keep it below about 24, right in that range, so we can almost have guaranteed profit at near highs, which is perfect. And that's exactly what we want. So textbook breakout strategy using basic patterns, basic indicators to determine good entry points, risk management, and all of that good stuff. So I hope you guys all enjoyed today's video. If you did, smash that like button, subscribe, and if you guys want to learn more, check out our school, and I'll see you guys in there. Like, follow, and I hope you guys have a great rest of your day.